to Financially Focused. My name is Dennise Williams, an approved financial coach. And I ask you if you can imagine that you have a team ready to support you and help you make the very best decisions so that you are a winner. Would that make a difference? Do you think you could see how the next 5 to 10 years just got easier because you have the right plan of action with your team? Well, that's what we do here at Financially Focused. We have an awesome lineup of expert guests that we interview who will speak to you about your personal plan of action, from real estate to credit access to career development and becoming an entrepreneur. Financially Focused will support the life goals of partnership, marriage, self-care, children, home ownership, your occupation, goal setting, which are critical to you. The ages of 25 to 65 are no joke, and a great plan is the key to your wealth. So that said, let's get down to our conversation about building your real estate portfolio. Now, with 500 rental units in the United States, rental units in the Cayman Islands and Jamaica, and now focused on buying property in the United Kingdom, we think that Kevin Richards, CEO of Kingston Properties, has a slightly little bit qualification to talk about building a global real estate portfolio and creating creative financial techniques. Welcome, Kevin.
Thanks for having me, Dennise.
Yeah, so you just have a little bit of experience over the last 15 years.
A little bit. We're getting to the 500. We're like halfway there, but we are getting towards the 500.
Right, but
the
countries are there. Cayman,
Jamaica, the US, and we're looking at the UK now. So
yeah, a little bit of experience.
I'd say a little bit.
Feel confident that you can talk about the subject? I think so. I feel confident about you.
I think so.
Okay, great. So we're here, this conversation is for investors with a similar mindset. And we're really grateful for the opportunity because I know you're busy and you're up and down and you have your teams in the different countries. So you're here and I'm really grateful. And what we want to do is share ideas on some key strategies. So first of all, let's set the framework, Kevin. So what we want to understand is how a big player operates and how a small investor can learn strategies. So we define a small investor as someone with one house in one location and either the desire to buy or the actual ownership of one or more properties in another location. And you have the dream to expand your real estate portfolio. So that's really who we're talking to. So let's get serious. So first question for you, Kevin. What was the motivation behind starting up Kingston Properties 15 years ago during the height of the 2009 global financial crisis? And what can smaller investors learn from your experience of having properties in different jurisdictions?
Yeah. So at the time, there was no pure real estate investment company listed on the stock exchange. There were some conglomerates that had some real estate interest, but there was nobody that was a pure real estate investment company. And we thought that the idea, I say we because I speak along with my predecessors, that the idea of a REIT, which is a real estate investment trust, would be a great idea for exposing the Jamaican market to the ability to participate in owning real estate without actually being involved with the day-to-day management of a real estate asset. So the idea of a REIT is a long-established idea. It's been in existence globally.
Well, there's 14,000 of them in the U.S.
50, 60 years now they've been in existence. But in 2008, there was
none here.
Nothing of that ilk in Jamaica.
Right.
We still don't have REIT legislation, but what we decided to do when the company was formed was to operate like a REIT. So basically list on the stock exchange and allow persons to buy shares in the company. The funds raised from that were used to buy real estate assets. And back in 2008, the first acquisition was some condotels in Trinidad and Tobago and the Carlton Savannah. In fact, back in 2008, our name was Carlton Savannah, and we changed the name in 2010 to Kingston Properties Limited. So what essentially what a small investor could do is look at how can you raise fund, because that's essentially how KP started, by fundraising. Sure, we listed on the stock exchange, so we were raising 400 million, but a small investor may be looking to raise a smaller sum like that. Look at your community. How can you raise funds from your community to do an actual real estate investment?
So you mean ask my family to give me money?
Whoever your community is, family, friends,
Yeah,
colleagues.
so that I can buy property.
Yeah.
Outside of the country.
Anywhere.
Right.
Anywhere,
Oh.
even locally. I think it's always important to explore the options locally first. Get to understand, once you understand the real estate business itself, it's best to learn it in a market that you understand before you start tackling an overseas market, because there are different idiosyncrasies with overseas markets. So I would say focus on developing and honing your skills on the local market first, and developing your investment strategies locally, and then you start branch out looking at overseas.
Right.
The difference, though, with some of the overseas markets is that, the system is set up differently, where you can participate in different types of assets. For example, duplexes or triplexes or quadplexes.
Right.
Those, we don't see a lot of those here in Jamaica. And what those are, for example, a particular thing which is known as house hacking that a lot of people do is that, there's a 4-unit complex where you buy the entire complex, you live in one of the units, and you rent the other 3 out. So you're generating cash flows from those 3 units, and those 3 units are paying your mortgage.
Right.
While you're basically living rent-free. Those are things, I think, that's a huge gap in this market that people can look at. I've often looked at it, and it's no judgment to people, but we tend to have an edifice complex in this country where we love to build a big massive house. I have 6 children, so I want all my children to have somewhere.
Yes.
It'd be better if you built something like a triplex or a quadplex, where it's 4 units. You can live in one. Even if you're doing it for your children, they can have 1 unit. They can have, any of the individual units. When they move out, you have that unit to rent.
Yes.
And generate cash flow.
Yes.
It's a little harder to do it when it's a big house, it's a self-contained unit.
Yeah.
But I'd say that would be a better, for me,
Yes.
it's a better strategy for you to enter into real estate investment. Look at building, a multi-unit property on the land that you have, instead of building the mansion.
The mansion.
The mansion.
Yeah, but we need to be big in the community.
That's right. But you'll have a big structure that is generating cash flow.
Okay.
And cash flow is very important.
Yeah, bankers like it.
That's right.
Yes.
Because what ends up happening sometimes is that, some of these houses end up being sold for little or nothing because, there isn't a huge market for a mansion.
Right.
So,
yeah. Okay, that's true.
And we tend to overbuild too. That's
But again, I need to be big in the community.
All right. If you're known as the one who owns multiple units, you're the king of the community.
Yeah, okay. All right. So you've given us a strategy. Next up is team building, because generally you don't do real estate by yourself.
No.
And
it's not advisable.
It's not advisable. Okay. So whether in person or online tools, how does Kingston Properties build an effective global team? And again, we're always asking the same question: how can a small investor who wants to live in one location but build wealth in another location, how does that small investor also build a team?
So the different aspects of the business that you'd have to look at, you'd have to look at, say, your asset management or your property management. Then there's the other side of it, say, legal, because legal is very important, and legal starts from your acquisition of the property right through to disposal of the property. The other thing you have to look at is your financing. So, you have to manage your accounting business, because for a number of reasons, most important being taxation. You have to have proper records and ensure that you are filing, and paying whatever taxes that you need to be paying promptly. And that starts with proper record keeping. And then, as I mentioned before, your property management thing. In our case, where we have portfolios in multiple jurisdictions, we have to have professionals that are very experienced and very familiar with the markets within which they operate. In Jamaica, we manage all our properties ourselves, but particularly for the assets that we own outside of Jamaica, we've had teams, like firms, companies that have been in the property management business for a long time, experience, have some skin in the game, because how you're compensated is a function of your performance. And they would handle all of the record keeping. So, in terms of the accounting side of it, they're a support for our internal account functions. And then on the legal side, we hire lawyers in those markets, and we like to look for partners who are somewhat familiar with the Jamaican culture. Maybe that's a way to look at it, because again, there are different idiosyncrasies between different countries. We find that it's best when we work with persons who are very familiar with Jamaicans and how we think and how we operate.
So that's actually a strategy. So
huge.
You're in Jamaica. So we're talking to the small investors. You're here in Jamaica. You want to buy in another country. So you're saying find professionals with a understanding
there are Jamaicans
of us.
Everywhere.
I'm telling you, somebody said if you go to a country and there's no Jamaicans, something
that
wrong.
country doesn't exist.
It doesn't exist. All right. So all right, but in your experience doing this 15 years, what would be one or two differences in the way Jamaicans do business as opposed to overseas, so that if someone wants to buy overseas, they're aware? One
of the things I like about transacting business overseas is the speed at which closes are done. You identify a property, you make your offer is accepted, agreement is drafted, you set a closing date. Depending on how you're going to finance it, if it's a cash financing versus bank financing, that determines the timeline on it. But if it's a cash transaction, you have a fairly quick close.
How quick? 5 days?
Sometimes it can be, not as quick as 5 days, but could be done in 2-3 weeks. 2-3 weeks? It depends, yeah.
And it's 9 months here.
It depends. It could, we've not had transactions, depending on, again, how the transaction is going to be funded. If it's a cash transaction, it can be done fairly quickly. What I like is there's a set closing date, and that date, all the parties are in the room, whether it's a closing agent who is going to verify that the title is okay, the transfer of funds happens seamlessly, everybody's in the room, all the signing between the buyer and the seller takes place, and you have one closing day and the transaction is done in that room.
So efficient.
On that day. Very efficient.
Speedy.
Very speedy.
Okay.
And I think a lot of that has to do with the digital nature of titling that happens there. And, there are huge discussions going on about Jamaica moving in that direction. And I think we are fairly close to that direction. And I look forward to the day when we can actually have quick closes on transactions, because time is money.
Okay, so that's one. What's the second difference you've seen that small investors should be aware of?
I would say the other thing is funding. Some of the requirements from the financial institutions may be a little different in terms of, how you're structured. If you're a company, you have to ensure that all your company documents are up to date. I think the same happens here, but you can actually pull that information online. You don't have to go to a company's office and get these documents. You can actually extract that information online and just submit that to your bank, or even your bank can do it themselves.
All right, so it's a lot of nuggets you've dropped. Okay, so let's get that clear. So you are here, but you want to invest in the US, UK, Canada, Australia, wherever. So you're saying, one, the speed of business is faster in other jurisdictions.
I found, yeah.
Okay. Two, find professionals who understand Jamaican culture so that the conversations are easier.
So much easier.
Okay. Three.
And those professionals start from even whoever your broker is that you're going to do. If you can find them.
Yes.
Ideally, I find it's best to work with people who are familiar with our culture.
Right.
So it could be your broker, your lawyer, anybody involved in the transaction.
Right. Okay. You're also saying that we need professionals, so it's not,
absolutely.
your uncle.
Absolutely.
Not the uncle, not the auntie. It's a professional, and these are companies. So be prepared to work with a company when you're overseas. And then the fourth thing you said, skin in the game.
Yeah.
So you're saying the performance of your real estate assets is very critical.
Absolutely.
Even as a small investor living here and investing over there.
Yeah. And the reason why we emphasize working with the professionals, because it's an accountability type of metric.
Okay.
As you mentioned, if you're going to use a family member,
the uncle does it when he feel like.
Yeah, there's no accountability. When you're dealing with a professional, their reputation matters to them.
Okay.
So there is, and they know that, if they fail in the transaction, that could affect their compensation. And, people are financially driven, financially focused.
Right. Okay. So here's this is the big one. Creative financing for real estate. So Kingston Properties declared its intention to move from US 71 million in assets that you have now to 100 million US in assets by 2025 through raising funds from the stock market.
Yeah.
Okay, so gold star to you. However, for the purchase of the commercial property in 2023 in Cayman Islands, you used bank financing.
Correct.
Okay, you guys are big players. For a smaller investor in a high interest rate, high inflation environment, what would creative financing look like?
So you start small. And I think a lot of people feel that they need to get from 0 to 60 in like 2 seconds.
Yeah, I need to get to 100 million US with you.
It took us 16 years to get to 71, 72 million. So, start US dollars, 72 million US dollars. Start small. You mentioned when we started back in 2008, our first IPO, we raised, I think, about 400 million Jamaican dollars. And what we have demonstrated to the investing public is we offer returns. Our performance is what has spoken for us, which has allowed us to constantly raise funds. We did a rights issue in 2015 and another one in 2019. We did an additional public offering in 2022, and hopefully we'll return to the market, to the capital market, the equity side, to raise more equity again before 2025 or in 2025, depending. Because of our performance and track record. So start small, but your performance along the way is what's going to guarantee you the ability to continue to raise more funds.
So I just want to jump in here and say that your benchmark as a real estate investment trust is paying out dividends to your shareholders. So essentially the shareholders give you their money, you go shopping and buy property. You then put in very awesome tenants in the property. These awesome tenants pay you rent on time. And that rent is what forms the basis of the dividends you pay out to shareholders. So essentially when people buy Kingston Properties, the stock, they are participating in the rental collection with you. That's correct?
And that's a typical REIT model where the average investor in KP doesn't get into the day-to-day operation of the real estate, the asset itself. That's what we do. So for your funds that you've invested in us, you collect those via dividends. And the other benefit that you get is from the appreciation in the stock price. If you think about, the equivalent of when we had our IPO back in 2008, the equivalent price was probably about $2, and the stock is now just shy of $9. So over the years, the stock price has appreciated. So you've gotten the additional benefit, because if you think about it, the value of real estate is also appreciating. So you get that appreciation through the appreciation in the stock price.
Correct.
And we're collecting rents and you get that collection of cash flow in the form of dividends.
Right.
So you're getting all the benefits as anybody who owns real estate, but you just don't get involved in the day-to-day management of it.
And you're saying that over the 16 years, as shareholders have benefited, they trust you, and they invest more money.
That's right.
Okay.
That's right.
Now, a small investor says, okay, I'm on the track with Kevin. Yeah, I'm not in your lane, but I'm on the track and I'm going to run the race. What are you saying when you say start small with creative financing? Give me an idea of what you mean.
So you can go back to, a thing called crowdfunding, or, go to your community. And by community, I said that could be your friends, your family, colleagues, your sort of extended community. And they believe in you and the vision and the strategy that you have in terms of putting together a real estate portfolio. Then that's an avenue in which they can invest in. Now, obviously, if you're going to be soliciting investment from a wide pool of persons, then the regulators have to be involved in that. And that's why I say start with, your community.
But what about if you went to your banker? I mean, you said, okay, I said, all right, Kevin, I'm going to go talk to my banker. I'm going to talk to a realtor. What would that conversation look like? What's the role of a realtor in helping with creative financing?
So I would say let's start with your banker.
Okay.
Have a conversation with your banker, because they're going to ask you for a business plan.
Okay.
And which will outline what is your strategy.
Right.
How are you going to make money from this thing? Because, before a bank decides to give you money, they need to see how they're going to get back their money from you.
Right.
So you need to develop a business plan. So if you're looking at real estate investment as a strategy, okay, what area of real estate investment are you going into?
What are my options?
Are you going to residential? Are you going to go into a small office? Are you going into retail? I think retail is a good place to start, because if you think about it, a lot of people are familiar with shops, whether it's a shop that's occupied by a restaurant or somebody who is in, grooming services, because those are very popular. Small office, a lotto place or something like that. You could say, all right, well, there's this building, an old plaza, how much would it cost me to buy? And you find out what the value of that. You put together a business plan. How are you going to acquire that? Then you take that to your bank. The bank is going to say, well, how much money do you have to make a deposit on this property? Now, you may not have all the funds, and I think this is where your community comes in. Maybe you can get some people, you pool together to come up with the deposit, and the bank will come up with the rest of the money. You acquire that property, you rent that out, all those shops to different people. You collect the rents, you pay the bank their interest, their debt service every month. You pay your investors, your community something. And I would recommend you retain some funds in the company for your next acquisition, because that's how you're going to grow. Once you continue to perform well and people develop confidence in you and your ability, the bank is going to lend you more money. They're going to call you and say, okay, when is the next property coming along?
Right.
Your community is going to say, yeah, you know what, I have some extra funds, let's do another deal. And that, if you look at what's happening in the US, for example, is the development of the private equity real estate market. It started that way, where people just got together, small groups of friends or family members. They identified a property, put together a deposit, from their community, went to the bank and got the rest of it, and acquired a bigger property and continued to build portfolios. And some of the most successful real estate companies, that's how they start. But people have to accept you have to start small. Some people just feel that they have to be big immediately. And
I just have to not do 16 years of work.
Yeah, you get into trouble with that.
Yeah. So we're in this team, though, for creative financing. You're saying your banker, your realtor,
and your community.
That's your team. Okay. And in your view, how would and in fact, it's actually, you really do need to sit down and write this plan, because the financing has the team, then the acquisition has the team, and the management has the team.
Correct.
And
Correct.
so there are levels of team involvement, and someone who's ready to do that has to be in that position.
Absolutely. Absolutely.
Okay, fantastic. So in terms of building the relationships, any advice in terms of how do you build a relationship with a realtor as opposed to a banker?
Yeah. Yeah, it's an interesting. Let's start with the realtors. There's so many realtors in the market. So many people have entered the professional in the last 5 or 6 years. But there are very few that specialize in commercial real estate. There are lots of persons who they may be able to do a transaction, but they don't specialize in commercial real estate. But I would say start by finding someone who's done transactions in commercial real estates, more than one. And then discuss what your ideas are with them just to get some feedback on what's happening in the market. And that's where you discover where the real opportunities are, because you may have an idea, well, this is what you want to do, but there may be a better idea just from the market information you may glean from a realtor. And not only a realtor, I mean, you can get that information sometimes from some lawyers who do real estate transactions. You may get that from other professionals such as valuers or surveyors, quantity surveyors, architects. They may be able to give you some ideas as well, because let's say in the idea of the shop, let's say you wanted to make the shop a little bit more presentable, have a conversation with the architect and say, okay, what are some of the things I can do just to make it a little bit more appealing? And then you could speak to a surveyor, a quantity surveyor, would say, well, how much is this going to cost? That's kind of information you're going to need within your business plan, because that's going to come up with what the total cost to do this type of investment will be that you have to present to your investors as well as to the banks. So I would say those are some of the key things that you'd have to focus on.
Oh my goodness. Now, let's talk about your push away from the hurricane belt. Kingston Properties made a decision.
Yep.
Now, all along in this conversation, we are talking to small investors who have an international focus.
Yeah.
Just give us some ideas about why maybe it's obvious to everybody now, but just give us some ideas about, how that came about for you as a strategy.
So it's a decision we took more than 3 years ago, actually, to sort of diversify our portfolio outside of the hurricane belt. Our concentration was mainly in Florida at the time, Jamaica, and the Cayman Islands. 3 areas that are susceptible to hurricanes. So that's when we branched off to Georgia, and we went into a partnership to acquire some residences in Georgia. So it started with Georgia. Now we're looking further afield. We're looking at the UK now, which is something that we've been talking about for the last 1.5 years now. We've identified some opportunities there, but that's a market that can be very competitive as well. So we've not been able to strike a deal. Hopefully, we'll strike a deal within the next 3 months there in the UK. But that's taking it further away from. It's the importance of diversification, because if you have all of your assets concentrated in the area of one, I mean, if you look at the trail of Beryl hit Jamaica. Cayman was also affected, and it went into Texas. So even, parts of the U.S., all 3 areas could be affected by hurricanes. So we're trying to move as far away from the hurricane belt as possible.
And that's something to consider for your international portfolio.
Absolutely, because that also has implication for things like insurance costs. Once there's a number of storms or such of the types of events, premiums rise. So that is a cost factor that you have to think about. So that's one of the reasons why, you have to manage your risk, and geographic diversification is one of the tools that we're using to manage that risk.
Awesome. Now, you're both in the physical real estate market and the stock market based real estate market. Just again, we've been talking about it, but I want to kind of just solidify why an investor would want to be a part of the stock market to grow wealth even though they love real estate.
Yeah. We've used the stock market as a critical tool for our growth. Started from inception with our IPO back in 2008. We found that the stock market, because of the level of transparency and governance that is required, that's the kind of thing that gives investors confidence. People are just not going to give their money to a stranger. They need to see has to be some level of accountability, and that accountability comes through the requirements of being listed on the stock exchange. So the stock exchange is a very important tool for us. And we've used that continually to continue to rise. So it's important for us to think of, we do think that the Jamaican stock market is one that has grown significantly over the last few years. When I say grown, I mean the number of participants who've come into the market. In fact, if you look at what our shareholder profile has been, 10 years ago, we had maybe about 250 shareholders. We now have close to 3,000 shareholders.
Wow.
Because more persons have seen the benefit of investing in a company such as KP. I'm sure there are many other listed companies on the stock exchange who've seen that kind of growth. It's because of the level of participation that is now coming from, the average investor, not just the institutions, but the individuals. And they're a critical part of our funding and our base. Sure, the institutions, own a larger chunk of us, but I think the activity of the individual shareholders, they're the ones who are actively trading your stock, so that's why your stock price is constantly growing. Or certainly we can speak for our stock price, because of the constant trading by individual shareholders. So, the stock market is an important tool, and if you're, again, a lot of persons as an individual think that the stock market is something for the big man, and they as but there's so many companies listed on the stock exchange that were started by individuals, just a small business, just an idea, and they sold that idea to the market that said, yeah, that's a good idea, we'll put some money into it. So people need to adopt that kind of mindset, that they too can go on the market and raise 100 million, 400 million, whatever it is.
So you don't have to give up your love of real estate.
Not at all.
And you can still participate in the stock market and benefit from real estate.
Correct.
Yeah.
Correct.
Yeah,
Correct.
and we talked about getting rental income as dividends.
That's right.
Okay.
That's the conduit. You buy the shares in the company,
yes,
and the company owns the real estate, and think about it like a cycle.
Yes.
So you invest in the company buys the assets,
yes,
the asset is rented out, and you generate the cash flows from that, and that cash flow deals with the operations, and if there are loans, you settle the loans, and the balance you pay back to your investors as dividends.
All right.
And then you reinvest it back into the company when we have a next raise.
Yeah. And so I'm very happy for this time with you, Kevin, because you've really given us a lot of nuggets for small investors. And what I'm seeing is the big word is team, building a team, and also building a business plan so that you can be held accountable, so that you can work with the team, know what each person needs to do, and it makes it easier to you to partner with your banker.
Yep.
Yeah?
The business plan is critical, because part of the process of doing the business plan is you thinking about how are you going to make this thing work.
Right.
Sometimes people just have this idea and then they think, oh, let me try this. But putting it down on paper,
yeah,
step by step, you'll know how this thing is going to work.
Yes, absolutely. Wow. Thank you so much, Kevin.
My pleasure.
Wow. As a financial coach, I love giving my clients tools that help them get a high return on the investment of coaching. So follow the links below and be sure to access the free gifts, which is 30 days free access to financial planning software and a free financial planning workbook. My name is Dennise Williams, your financial coach, and I look forward to supporting you on the journey to more income, more assets, less debt, and less stress.